Hey everyone, welcome back to Corporate Decoder. Today, Tenon just filed a Form 8K and I'm seeing some key executive and compensation changes. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is boosting pay for its top execs and extending a contract for its executive chairman, and we're going to break down what that could mean. This report from Tenon Medical Incorporated covers some important updates regarding their executive team and compensation. It is filed on the 26th of February 2026, but it also discusses actions taken on May 7, 2026. Let's untangle this. First up, the company's compensation committee approved a new 2026 executive compensation plan. This plan is designed to increase the pay for certain high-level employees starting the 1st of March 2026. This sounds like a pretty standard move for a growing company, but let's look at the specifics. The base salaries for the Chief Executive Officer Stephen M. Foster, the Chief Financial Officer Kevin Williamson, and the Chief Operating Officer Richard Ginn all got a 5% bump. For Mr. Foster, that brings his base salary to $420,000. For Mr. Williamson, it is now $330,750. And for Mr. Ginn, it is $304,500. A 5% increase might not seem huge, but on these salaries, it is a significant amount of money. It signals that the company wants to keep its top talent happy and motivated by rewarding them financially. Beyond base pay, their bonus opportunities are also changing. For Mr. Foster, his annual bonus potential is now set at 50% of his base salary, tied to reaching specific company goals. For Mr. Williamson and Mr. Ginn, their bonus opportunity is set at 35% of their base salary, also depending on hitting certain milestones. This shows a performance-based incentive structure, which is good because it aligns executive pay with the company's success. On top of that, there is a potential for another bonus. Mr. Foster could get up to $100,000, Mr. Williamson up to $70,000, and Mr. Ginn up to $50,000. These additional bonuses are also based on hitting certain targets set by the board. So we're looking at a pretty substantial compensation package for the executive team if they perform well. This is common, especially in companies that are aiming for growth. Now, let's switch gears to another key executive. There is also an update on the consulting agreement with Richard Ferrari, the company's executive chairman. On May 7, 2026, the Compensation Committee agreed to extend Mr. Ferrari's consulting agreement. This agreement was originally signed back in May 2021. The extension is for one more year, running from May 7, 2026 to May 6, 2027. During this period, Mr. Ferrari will continue as executive chairman, and his compensation will be $45,000 each quarter, which comes out to $180,000 per year. Keeping an experienced executive chairman on board for another year suggests they value his guidance and leadership, especially during potentially critical growth phases. This amendment is being filed as an exhibit, and it is important because it formalizes the terms of Mr. Ferrari's ongoing role. It is a pretty straightforward extension, but it confirms his continued involvement. Looking at the company's structure, Tenon Medical Incorporated's common stock is trading on the NASDAQ stock market LLC. It has a par value of $0.001 per S-share. This is a very technical detail, but it relates to the nominal value assigned to each share of stock. They also have warrants trading under the ticker TNON. Warrants are essentially options that give the holder the right to buy shares of the company's stock at a specific price before a certain expiration date. Looking at the recent news, these warrants have been trading at a very low price, around $0.01 with minimal trading volume. This suggests very little market interest or perceived value in these warrants right now. This is something that often happens with companies that are in a very early stage or facing significant challenges. The company is also checking the box to identify as an emerging growth company. This status allows them to take advantage of certain regulatory benefits, like longer periods to comply with new accounting standards. This is pretty common for newer companies trying to get off the ground. Most of the details in this 8K filing center around these executive compensation changes and contract amendments. There is a reference to Item 1.01 entry into a material definitive agreement, but the specifics of that agreement are covered under Item 5.02, which deals with executive changes and compensation. So really, the core of this filing is about the people running the company and how they are being compensated. Now, looking at these compensation changes and contract extensions, it indicates a focus on leadership stability and performance incentives. Boosting executive pay and extending contracts for key figures like the executive chairman can be seen as a strategy to retain talent and align them with the company's objectives during what might be a crucial period for Tenon Medical Incorporated. However, the context from the news headlines is quite telling. warrants trading at $0.01 with minimal volume, as reported by Newsline.com, suggests a high degree of skepticism from the market about the company's prospects or its underlying value. We also see reports noting that the stock price is down significantly, with some suggesting reversal setups. This low valuation and thin trading might explain why the company is focused on retaining its executive team through increased compensation. They might be worried about losing key personnel if they are not adequately rewarded, especially if the stock price is not reflecting potential future growth. The risk I am watching is whether these increased executive compensation packages can actually translate into improved business performance and a higher stock valuation. If the company continues to struggle to gain market traction, as suggested by the warrant prices, these compensation increases could be viewed as a drain on resources rather than an investment in growth. What I am actually looking for is evidence of a clear strategy to drive revenue and profitability that justifies these higher payouts. And the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video, subscribe for more, and join our Discord community linked in the description.